Good morning and welcome to another edition of the OFX Currency Corner. The Australian dollar maintained a relatively tight range through trade yesterday as much of the world enjoyed an extended long weekend, with Asia enjoying the Chinese New Year and the US celebrating Washington's birthday. Now we look ahead to where we might move this week, and there are a number of key items on the macroeconomic docket. The RBA minutes today may give us a further insight into where the Reserve Bank sees interest rate forecasts going throughout the year ahead. Although the statement of monetary policy that we had out last week and the minutes or the announcement after the last meeting suggests that the RBA will be maintaining a gradual pace of interest rate adjustments, and that perhaps we won't see the 2 rate hikes this year, and that we'll be looking into 2019 for any monetary policy adjustments. A key factor in deciding where the RBA goes will be wage growth numbers tomorrow. We have seen, despite improvements across the employment industry and the employment markets throughout the last 12 months, really, that the wage growth has failed to follow through with that. And if we do see a strong read tomorrow, then that may prompt some investors to push through an earlier rate hike after the second half of the year. We look to the US Federal Reserve minutes as well and the ECB minutes as well to drive direction. And while the US dollar did stage a recovery last week on risk-off appetite, as that returns, the bears are coming back out, and the US dollar did touch 3-year lows on Friday. So we'd imagine that the Australian dollar could make another push on towards that 80-cent handle as the US dollar remains firmly entrenched in this downtrend. If you would like any further currency direction, please don't hesitate in contacting any of our teams.